Welcome back to the final session of the Asia Finance Forum of the Asian Development Bank. So we are going to have one more roundtable for you. And this roundtable is entitled Innovating an Inclusive and Safe Green Future Through Policy. And I have the pleasure to hand over to our moderator, Dr. Sung-Soo Bra, who oversees the ADB-wide collaboration, innovation and knowledge management of the transport, energy, urban, education, health, and finance sectors at the Sustainable Development and Climate Change Department at ADB. And it's maybe interesting to know that he also served as the director at the South Asia Department in the previous position. So Dr. Sung-Soo has 3 distinguished panelists with him. We are looking forward to 70 minutes of interesting conversation and dialogue. So Sung-Soo, the floor is yours.
Thanks, George. Kind introduction. Good afternoon to everyone, and also distinguished panelists. Welcome to this final session, day 3, roundtable 2. The pandemic has really adversely affected our livelihood and economy and also health. But this gave us a lot of opportunity, particularly new policy, regulations, and innovation that really increased inclusive access to the finance during the pandemic and also provided the opportunity for green recovery start to the economy. Public-private dialogue and partnership have been key developments in several markets. Advances in financial services and underlying policy, especially spurred on during this COVID-19 pandemic, have brought more people into financial system and increased efficiency and outreach. However, new players and new innovation have also increased the potential for the systematic risks, including challenges around the prudential risk, market conduct, and governance issue, and unique consumer risks, especially around data privacy and cybersecurity. To achieve the potential of these innovations, policymakers and regulators in developing countries are working together with international institutions and private sector through public-private partnership and dialogue to ensure development of innovative and green and inclusive businesses and jobs. This session will discuss how regulators and policymakers balance inclusive, innovative financial policies and regulation to support investment in innovative financial services while ensuring safety and soundness and steps to a green restart to the economy. The session will also look at the role of public and private dialogues to help support sectors' development. Today, we have 3 distinguished panelists. The first, Mr. Esala Mashtaba, Deputy Governor of the Reserve Bank of the Fiji. Mr. Esala Mashtaba is a Deputy Governor of the Central Bank of the Fiji. He was appointed Deputy Governor in January 2018. He is the Korea Central Bank and joined the Central Bank 1997. He had senior roles for long there, and then in around 2010, he headed prudential supervision and financial stability as a chief manager of financial institution. Prior to being appointed as the deputy governor, he was head of the foreign reserve management and also monetary policy implementation. We also have a distinguished panelist, the Mohammed Siddiq. He is additional director of the Central Bank of the Bangladesh. He is in charge of the implementation of the banking regulation and formulation of the prudential and macro prudential policy for all banks. He has 26 years experience as a central banker with a proven track record as a central examiner, offsite bank supervisor, and policymaker. He is skilled in the research and risk management, banking laws, strategic planning, and training. He is also expert on the banking resolution and restructuring. And also, he is also the enormous experience in stability issue. He extensively contributed in developing and implementing risk management framework and also venture capital framework for banks in Bangladesh. Lastly, I'd like to introduce the Madam Rajwari Singh, General Manager and concurrently Chief Marketing Officer of Agriculture Insurance Company of the India Limited. She has 35 years of experience in insurance industry. She has mainly worked on in the area of implementation of crop insurance since its inception in India, handling the portfolio of the underwriting, underwriting and claiming. Currently, heading the emerging line vertical as a Chief Marketing Officer and exploring horizons for diversification of the business portfolio from crop to agriculture insurance, and also working on new untapped potential in the field of the aquaculture, sericulture, livestock, and other risks faced by the farmers. With this, I'd like to warmly welcome this distinguished panelist here. Now, for the audience, I'd like to remind to use the Q&A checkbox for any question you have it during the Q&A at the end of the session. With that, I'd like to start one question to the all panel. That's one common question. I ask the all panel, each panel to drawing from their country or organization experience to respond to this. You know, as the country rebuild their economies after COVID-19, it is so important and fundamental that they see this one as the unique opportunity to lay the foundation for a green, resilient, and inclusive future. How are your institution and government working at different level to meet your development objectives and to ensure that transition toward a green economy is proper and inclusive and fair and just? I'd like to first invite the Deputy Governor, Mr. Esal Mashtabua, to respond to this. Thank you.
Thank you, Sungsup. Good morning, good afternoon, and good evening, wherever you're joining us. Allow me, first of all, to convey our immense privilege to be invited to this forum, to share our thoughts, our experiences, and our insights from Fiji and the Blue Pacific. As we heard on day one, on session one of day one from Mr. Denton Rarawa, we in the Pacific live at the cold face of climate change. We are small in relative land size, but we are large ocean states. Decades of our development and our very existence is under threat. So for us in the Pacific, and indeed Fiji, we totally support the thinking, as outlined by our moderator, that this is a fundamental opportunity, that rebuilding our economies post-COVID provides this unique opportunity to lay the foundation for this transition to green economy in a way that is pro-poor, inclusive, fair, and just. So we'd like to thank ADB and the partners who put together this forum. We have indeed been encouraged by the enthusiastic and supportive sentiments that have been shared over the past 3 days. So while we are grateful for the opportunity that post-COVID recovery presents, what drives our policy agenda here in Fiji is walking the talk. In Fiji, we became the first emerging economy and the third country to issue a green bond in 2017, and the 7th country in the world and the first big ocean state to pass domestic legislation inclusive of a net zero emissions target by 2050. So in Fiji, our government has been leading the charge with an enabling legal and policy environment which is supported by our development partners and us at the central bank. We lend our technical expertise and our convening power. And we heard in the first session from the experience of Philippines that the enabling policy environment is key. Our Climate Change Act declares climate change as an emergency, and then it aims to establish a comprehensive national response. Under the Act, the Reserve Bank is legally mandated to play a supportive role in developing and implementing appropriate policy, so basically to embed climate risk in decisions on financing and investments. And linked to this is necessary reporting, awareness, capacity building that will help us in this transition. So currently we are undertaking groundwork with our development partners, which include Sustainable Banking Network, the ADB, the World Bank, and we are looking for guidance from global standard setting bodies such as the Financial Stability Board. We are encouraged by the work and guidance to financial institutions of GFANs, as was noted by Mr. Kani in his keynote address. So if I may quickly just add two examples of how we in the central bank have worked with government to meet their development objectives in ensuring that this transition to a green economy is pro-poor, inclusive, fair, and just. We are scaling up our ambition on financial inclusion and increasingly integrating our work on financial inclusion with the SDGs and inclusive green finance. And also we are enhancing the monitoring and evaluation framework of our financial inclusion work. We acknowledge the support of our partners in this space, Alliance for Financial Inclusion, UNCDF, World Bank, IFC, and the donor countries that have generously provided their financial support. In our recently launched National Financial Inclusion Strategic Plan, inclusive finance forms one of the 4 priority pillars. We are also working with stakeholders on climate-related financial products to mitigate the effects of climate disasters targeted at vulnerable segments and women. So an example of this was in the height of our second wave of COVID infections last year. We launched our paramedic insurance scheme, a first for the region, and this is in partnership with and the assistance of UNCDF and government. So the timing of this launch was to ensure that we had this cover in place prior to our cyclone season in November of last year. So the product is currently being piloted in our FinTech regulatory sandbox. And the scheme targets farmers in rural areas and their families whom without this tailored cover otherwise would not have access to any form of insurance. So this work was done, there was work also done on informal housing with some level of building standards and again parametrically based. Our green bonds, which I mentioned was issued in 2017, funded mainly adaptation projects in rural areas, maritime areas, so targeting the more vulnerable parts of our vulnerable communities. And now we are collaborating with government on the groundwork for a blue bond and a sustainable development bond framework. So I will stop there for now, and I'm happy to elaborate further during the discussions. And back to you, Sang-Suk.
Great, Mr. Sala, sharing your government effort in the climate change area. And also glad to hear that you are the first country to issue the Green Bond 2017, more than 5 years ago. That's excellent. Now I'd like to invite Mr. Siddiqui share your experience and on this regard.
Thank you, moderator. Good afternoon and good evening. Greetings from Bangladesh Bank. Actually, I start like that. The whole world is now facing the double whammy. One of the pandemic recovery and another is the war in Ukraine. So Bangladesh is not the exception of this. Simultaneously, the climate change has also been very erratic. Given these multi-pronged challenges, the policymaker of Bangladesh making concerted effort for green recovery from the pandemic by focusing more on sustainable finance. First, I'd like to start with the government-provided stimulus packages. Actually, government and has extended 1.2 trillion taka, that is 4.44% of the GDP for the economic recovery from the COVID-19. This program actually includes the interest subsidy to the industry. That is, those industries that were facing to repay their interest and their loans. So, say a little interest subsidy actually provided with from the government stimulus program, and we have give the working capital facilities for the large industrial industries, and especially for the SMEs there. That was a very needed just after the COVID-19, because at that time, especially the RNG sector facing a lot of problems, they need to be continue their service. And that was very difficult time actually passing at that time. We extended 50 billion local taka with a very low interest rate, that is 2% interest rate from the banking system. And at that time, the beneficiary was covered the 3.8 million. And out of that, 2 million is female. And that amount is actually we provided through the MFS, the mobile wallet, because that pandemic time, it was very difficult to open the bank branches something. So we have the system. So we very shortly, within 10 to 15 days, we covered this area there. And the government also extended the interest subsidy programs. That is the 20 billion interest for servicing the performing units there. And the beneficiaries were there 7.3 million farms and enterprises. And also the working capital facilities we extended, that is taka 730 billion for the industries and taka 200 billion for the SMEs. So they still are using this fund there. To address the impact of COVID-19 and the gradual economic recovery, Central Bank initiated 9 refinance scheme. Is a very initiative, but in 2020, 2020, 2021, and 2022, we introduced more refinance projects and schemes is there. So the beginning 9 refinance scheme that covered the taka 947.5 trillion, especially for the large industries, SMEs, agriculture, informal sector, especially covered the poor and the marginal people, as well as we introduced the credit guarantee scheme for the small enterprises there. And we actually extended a lot of indirect support there, like the reducing the policy rate and relax the regulatory issues there. So we relaxed a lot. And Central Bank also allowed some moratorium to the specific industries and the SME sector for the gradual recovery of the economy. And later in, I mentioned that 2021 and 2022, we introduced a lot of refinance scheme. Like we tried to develop the new entrepreneurship development, self-employment initiatives like that, or we actually try to build up some startup funds. That is actually we sent from the Central Bank, we provided the taka 10 billion almost. And for the marginal and the landless farmer, and for the low income group populations and the small business finance schemes, we also provided the taka 5 billions for this. And for the ensuring the food security, refinance scheme we extended for the agro-based activities, especially in the some particular area, that is almost the taka 5 billion there. And we have some other agri-product related refinance scheme, which covered taka 49 billions. And we have some employment generation, like in the fisheries and the livestock part and youth employment side. So we actually, from the Central Bank, extended the taka 10 billion in this fund. And the microcredit, as usual, for the poverty reduction in income generating activities, where the refinance schemes actually provided taka 5 billions. And one of the interesting issues that the back to home, that is some of the wage earners actually working in different Middle Eastern countries there. For the pandemic, they need to back to their home. So to recover that and to make them into the employment system, actually central bank helping with providing, giving the refinance scheme taka of 5 billions there. So actually, the idea of green recovery from the pandemic is indeed needed for a healthier, resilient, and sustainable future. Bangladesh adopted, that the National Financial Inclusion Strategy in 2021, just after the COVID hit is there. So the aim of this strategy paper is to maintain the sustainable and impactful financial inclusion through digitization and innovations. This is our main objectives. And we have a lot of sustainable and green initiatives in Bangladesh. Especially, I like to mention some that to protect, conserve environment, natural resources, and address climate changes. The Bangladesh Bank, the central bank, launched sustainable finance policy for the banks and non-bank financial institutions in 2020. It includes 68 products under 13 categories. The major products includes solar home system, biogas, wind power plants, effluent treatment plants, the organic farm, and so on. And we established one green transformation fund that is taka 4 billion amount, and encouraged the lenders to give loans to the enterprises. Those are keen to convert their industries into the green one. And we actually introduced this sustainability ratings that for the banks and NBFIs, or actually those industries that are helping and try to get their green loans. So we are increasing, and we are continuously evaluating with the sustainable rating. And in our policy, actually, we give to the banks and BFIs that mandatorily they need to give the sustainable finance up to the 20%. And out of these, 5% should be in the green finance loan. And in the last year, in 2020, we actually rewarded the 10 banks and 5 NBFIs. Those are actually giving the green loans here. So I just to give some notable initiative I will mention like that, and after that I will end my part. That actually Bangladesh launched the green banking in 2009 and framed the green banking policy guidelines in 2011. And we have a ETP refinance project adopted in 2009 with the fund of taka 4 billion. That is a revolving fund with the lower interest there. And we have an environment risk management guidelines that was issued in 2011. And Bangladesh Bank opens a dedicated sustainable finance department in 2015 for widening the use of the sustainable finance, incorporating the green banking and CSR activities. And CSR policy, actually, first we introduced in 2018. It's a long back. The aiming was socially responsible and sustainable finance. And that guidelines actually revised in 2020. And the sustainable finance policy for the banks and NBFI that is launched in 2020. So I'm closing at that part right now. Thank you very much.
Mr. Siddiqui, thanks very much for quite comprehensive introduction of the Bangladesh and remarkable experience in inclusive and sustainable and green financing area. Just what I can see that the big similarity between Pacific and Bangladesh. Pacific was very much vulnerable to climate change. So does Bangladesh. The Bangladesh, though you are not the island country, but you are the one of most affected by the climate change. Frequent typhoon, cyclone, and flooding. So environment preservation, the green recovery is extremely important. I already can see that government already acting on this. I'm very much impressed. Now I'd like to now invite the Madam Singh, as I mentioned at the beginning, you and then your company has the best experience. It's very rare in the sector. Just over to you. Madam, you are muted.
Yeah, a very good afternoon and namaskar to all the people who are present. It's a great opportunity for me to be part of this this particular panel for this roundtable, and I really thank the Asian Development Bank and the forum for giving me this opportunity. So as already he has introduced me that we are into crop insurance and India is the largest crop insurer in the world. But now coming to the question the moderator has asked, I think COVID, the foundation was already laid for the development, but the COVID has given the momentum, or it has really accelerated the process for the green future through policy interventions. Not only in India, across the globe, in all the countries. So India is not far, and you have, all of you have already seen that how India has risen to the situation, whether it was, the vaccination drive or, supporting the other nations for the vaccination, providing the vaccination, that was one part of it. And, the main thing what I would tell is that the Atmanirbhar package, if you have heard about the Atmanirbhar package, which was announced by the government, which had a 20 lakh crore of outlay for addressing the various issues. And Atmanirbhar in Hindi is nothing but a self-reliant India. That is what we call a self-reliant India. So it had started earlier, but with the Make in India concept, but this COVID-19 particularly has given the much needed impetus to drive it further, and the basic the pillars for this particular Atmanirbhar package. There were it was 5 pillars around which the Atmanirbhar package was revised. That is the economic development, of course, which entailed infrastructure development, employment, and the technology. Basically, it should be technology driven, and of course, as you know, that India is a vibrant. Has a vibrant demography. It has the advantages for the required economic development. So all the impetus was given to the various facets of the economy. It was the manufacturing sector and addressing the laborers. You might have seen that the laborers were migrating back to the villages during this COVID particular 19 situation. So that MSMEs, the laborers, and and what you call the below poverty line people, all these things were being addressed in this package, so that a comprehensive economic development was thought of, and things are progressing in that particular line. That's what I would like to say.
Thank you, Madam Singh, for sharing your experience. This is great. Now I'd like to come to the individual questions for each speaker. Maybe first start with the Deputy Governor, Mr. Sala Mastadoa. The one question I have with you, that Fiji and the Pacific country face enormous and urgent environment and economic, also social challenges brought out by the climate change. I would like to ask you how that your bank finding way for the financial sector to incentivize the sustainable transition to a green economy in a blue world. Since expected cost of the due to the climate change far exceeded most Pacific Island countries, the financial capacity, what is your current thinking for bringing forward investment in key development priority areas. Over to you.
Thank you, Sung Sup. So I break that down into two. So I'll address first. So how is the Reserve Bank finding ways for the financial sector to incentivize the financial sector towards this sustainable transition to a green economy? So in a green economy in a blue world. So we start by saying that I wish to just state at the outset that transition from a green economy to a blue world strategy is extremely important for Fiji. As I mentioned in my opening remarks, we are a large ocean state. Our dependence on the ocean spans a number of our very key economic sectors, fisheries sectors, our shipping sector, and the tourism sector, all key sectors for our economic livelihood. So far, our efforts at the central bank in incentivizing the financial sector in this green transition has been rudimentary. So by that, I mean, like, it's very basic. But a common theme of policymakers will empathize with in developing countries, and I did hear this in the previous session, is not letting perfection get in the way of progress. So we have been doing our part. My colleague from the Central Bank of Bangladesh had said, we also provide our special facilities where we provide financing through concessional financing to the banks to on-lend. Initially, we on-lend for import substitution and export financing, and we've expanded this in recent years to include sustainable and renewable energy projects. We have a disaster rehabilitation and containment facility, which helps building back after disasters and building back to a level of climate resilience. We have targeted lending ratios, again, something similar to what was shared by Central Bank of Bangladesh. But for us, it's just backed by our moral suasion. We just encourage the commercial banks to lend at least 2% of their deposits and similar liabilities to the renewable energy sector. We have a fintech regulatory sandbox, which I mentioned earlier, which supports our parametric insurance deployment, and it also encourages innovative financial solutions. So I mentioned earlier the responsibilities that we envisage under our Climate Change Act. We recognize that the domestic financial sector needs to play its role in contributing towards this, towards financing climate adaptation and mitigation. And this means integrating climate risk into decision making. We acknowledge that this will probably include regulatory and prudential incentives, be they capital or liquidity requirements, and most probably factoring carbon costs and pollution in tax or incentives, tax or levies. And here again, we are, I'd like to allude to the address provided by Mr. Kani, where he mentioned the partners, because we are constantly looking for guidance in this issue. We're looking towards our global partners, our global standard setting bodies, our partners. And during this address, he had alluded to a common architecture for the net zero transition, mobilizing capital, blended finance at scale with high multipliers, and a set of guidelines and frameworks for net zero transitions that is decomposed by sectors. So sector pathways, stranded assets. So providing this guidance will enable countries to draw from this as a foundation and then develop their own transition plan. So all this work that we are seeing happening out there and following this forum, we'll have a whole body of experiences shared here, is feeding into our continuing efforts to green the financial sector. So this is a work that predates at the central bank, that predate our Climate Change Act. So we are continuing our work on this in developing a sustainable finance framework, green taxonomy development and capacity building initiatives, along with building a sustainable finance roadmap is included in the inclusive pillar of the National Financial Inclusion Strategy that I had alluded to earlier. So the second part of the question, Sung Sup, you mentioned we understand that the costs far exceed our capabilities. The former governor, Denton Rarawa, mentioned that whatever solution we at the Pacific are looking at, we don't want to be overwhelmed by taking on further debt. So our thinking on this and some of the key terms that I've been hearing perking my ears over the past 3 days has been collaboration, partnership, radical cooperation that was shared at the last session, blended finance, further innovation, debt for climate swaps, catastrophe bonds. And our Climate Change Act outlines our ambition as a country to meeting this financing. We know that we can't do it alone, so it outlines some collaboration, our aspirations to collaborate with our donors, our climate partners, our sector recipients, ensuring that we have proposal designs ready, funding alignment, priority setting, efficient implementation of arrangements, and putting this framework for tracking, monitoring, and evaluation. So a lot of this, as I mentioned, being the first developing country to issue a green bond, a lot of the experiences we gained from the green bond also helped us with this. But and finally, just the engagement with climate funders, adaptation fund, the green fund, IMF facilities. IMF rolled out a recent facility that had a 20-year term that's also designed to address climate change. So all these are work that we are looking to ensure that we are not overwhelmed by debt in trying to address the challenges we have on climate change. Thank you, Sonsu.
Deputy Governor, Esala, for your insightful response to this. It's excellent. Yes, the Pacific, particularly, you have an enormous challenge you are facing. That whatever you're doing, that would be extremely important for not only Fiji but other Pacific Islander, but also even has very good, I think, the lesson to the other country also. Now I go to the Mr. Siddiq, the Bangladeshi bank. I have a bit expanded a bit question covering not only green financing and inclusive financing part also. The pandemic and climate change pose daunting challenges to Bangladesh and also Bangladesh Bank. Due to global warming and the rise of sea, it is predicted that 1/3 of the Bangladesh may go under the sea level. In this context, resilience and adaptation are critical issue that financial services need to focus on to address impact of the climate change. I know, as you said, that your government and the BB, the Bangladeshi bank, doing excellent job in this regard. Can you highlight the initiative your government and Bangladesh took to address this issue, the green financing and inclusive financing, and address the climate, the adverse impact of the climate change for the country? This is a big question, but since BB, you are the apex body of the all those, over to you.
Thank you very much, moderator. Actually, I discuss a lot of things that what green initiatives actually we have taken in this part there. So some issues actually I try to introduce that what type of this green initiatives is helping in developing our two main sectors, especially in the RMG and the leather sector. Actually, we are now facing a lot of problems there. You know that especially the RMG sector, this is the #1 export item of our Bangladesh. And also we have the second largest RMG exporters in the globe. And the RMG we export in 2021, that is almost the 36 billion USD, which was in 2020, 28 billion. So you will find that our RMG exports increased by 1 year as there. So we did actually a lot of things to increase this there, because you know that we need to be some compliance issues globally we need to do, because we already achieved that global standards. That's why our export is increasing in that part. And I already mentioned that we have the Green Transformation Fund, and that was built with the US dollar 200 million and euro 200 million. So that is two combinations there. The purpose of that for refinancing of the import of industrial raw materials to support the textile and the leather sector. And we also need to take some safety measures of that and to finance the safety retrofit and environmental upgradations, especially in the RMG sectors, which was taken in 2019. That was the euro 50 million. So in 2020, actually, we big change in this ground. We are using this as a pre-finance, not the refinance. The pre-finance credit facilities that is offered in 2020, that is eligible for the ready-made garments factories under social upgradation, aiming to improving the safety, health, hygienic facilities to the worker and the workplace environment to overcome the COVID-19 pandemic situations like that. And we have the Technology Development and Upgradation Fund that is introduced into 2021 for the refinance of that is in local taka 10 billion for the modernizations and the technology upgradations of the export-oriented industries by extending loans to tenure up to the 10 years, is that for the longer term. And we have Export Development Fund we introduced, that is under the USD 7 billion. That is a very low interest rate, is the 22%, and the tenure is more than is almost 6 months is there. And this is the purpose of the import of raw materials for the export items, especially for the RMG sector. So and for the textile, we give a lot of facilities that almost 25 million USD in the RMG sector and 20 million USD in leather sector. For every individual institution can use this fund there. And we extended a lot of funds for this, the back-to-back facilities, buyer's credit, pre-shipment credit, post-shipment, and the retention quota. And we have a very interesting item that is the cash incentives to encourage these type of industries. And in we give the cash subsidy to the RMG sector is 12 to 15% and is there. And for the leather product is 15%, and if it is a crash product is 10%. So that is in 2021. Actually, we gave the 38.15 billion local currency for this the cash incentives. And in the current 2021-22 fiscal year, that is within 11 months, it is almost the 40 billion local currency. So this is the actually incentives to that. So what happens to this type of industry? Why we are giving that? We actually find that some 338 washing, dyeing, spinning, weaving, and garments factory now saving the 28.7 billion liter of water a year by adopting the solution provided by the Partnership for the Cleaner Textile that is provided from the World Bank Group. So we have a great achievement from this type of sustainable fine environmental issues like that. And the factories, those are saving 2.9 million megawatt hours of electricity annually and avoiding almost the 558,000 tons of carbon emission. So this is actually radical things happen to the system with the support to extending this type of industries there. Now I will emphasize on our leather industry. This is our second export items there. And actually we are covering the 10% of the global demand for the leather. And the government of Bangladesh is working hard to prevent the environmental pollutions caused by the leather industry. We are the very keen interest on that. And we actually created a very separate zone. That was initiative was very earlier in 2003 that we established the tannery, the industrial estate in the special zones to prevent the pollution. You know that we have a nice river, Buriganga, that is the city is beside that river. That was polluted. So we shifted this item for the far distance area. And that facilities actually hold that the 25,000 cubic meter of liquid waste that was earlier the 40,000 cubic liter. So that is a tremendous improvements on that. And actually we are exporting the leather goods that is worth of almost 941.6 million US dollar. That is a fiscal 2021. And that is about 2.43% of the total export of our country. Thank you very much.
Thank you, Mr. Siddiqui, for quite innovative things going on in Bangladesh, even supporting the garment industry, which is a major industry of the Bangladesh, and also for green recovery and resilient, making the resilient economy. Now I'm turning to Madam Singh regarding your company. The impact of the climate change on agriculture is immense. It is important in both economic and food security terms. Agriculture Insurance Company of India, as you said, is the largest agriculture insurance company in the world. And your company has 40 years of journey in the sector. Technology is a key enabler to address the green and inclusive growth and also recovery. To what extent has the crop insurance and advances in agricultural technology been able to address the vulnerability of farmer and the rural community to climate variability and also related distress? It would be great if you can share you and your company's experience and also insights. Thank you, Madam. Over to you.
Yeah, thank you, Mr. Moderator. So as you all know that, the 70% of the population in India is staying in the rural India. And, it is basically predominantly an agriculture-based agrarian economy of a country. And of course, I can say that the penetration of insurance is very low as you compare to the global figures. Right now, the penetration of insurance is around 4%. If we put life and non-life put together, it's around 4% penetration, which is very, very low as compared to, the global scenario. But I can, take pride in telling that the penetration as far as the agriculture insurance, or rather crop insurance is concerned, is trending somewhere like between 22% to 25% per annum. So this, I really take pride in saying that, that is a penetration of agriculture insurance is far more high than the other insurance. And of course, we can attribute this on one side to the government policy that initially it was mandatory for the farmers who were availing institutional credit for their crop production activity, and it was made mandatory for them to insure. But I can also say that it has been made voluntary 2 years back, and still we say the penetration level has not gone down. So everybody is aware that, you know, climate change is the talk of the day or the decade. And so especially when you come to India, it is so divergent in terms of geographical spread. You have a long coastline which is susceptible to cyclones and floods every now and then, and the frequency has been increasing over the years as we see. And then we have other agroclimatic zones which are drought prone. You know, continuously they are drought prone. So you have these two basic risks which are there for the farmers, for the farming community, which they face year after year. And definitely crop insurance has been a very important risk mitigation tool for the farming community of India, and has been addressing the crop production related risk to a greater extent. And what is more important is that the timely giving the benefit to the farmers is very important in times of distress. It is very critical. So I would say that this is almost 5 decades of a crop insurance implementation in the country, and it has progressed like anything from the from starting 1970s till 2022, and it is driven, it is totally driven by the government support. That is, the government subsidizes either by way of premium subsidy or a claim subsidy, because as you know, agriculture is a very systemic risk kind of thing, and if you see commercially, ensuring this risk is very difficult. So the prices will be high, and which the poor farming community cannot afford to pay that much of the premium. So the subsidy, the government subsidy, is very crucial in this, and that is how the program has been running. And we also take pride in telling that India insures the largest number, AIC rather insures the largest number of farmers in the country. From the last, we are there right from 4 or 5 decades, and we have been providing that kind of risk mitigation to the Indian farming community. Now, coming to the technological advancements, what we are doing for the sake of the farmers, or rather with the help of the government, is that basically it is an area approach scheme. You mean to say that individual farmers' losses, to assess the losses of the individual farmers, it is very difficult looking to the population size and the number of operational holdings in the country, which are very small in nature. 60% of the operational holdings fall below 1 hectare kind of thing. So assessing the losses at an individual level is not difficult. But as I said, flood, cyclone or drought are the major risks. 90% you can attribute the crop losses are due to these risks. And these are always widespread calamities. So the assessment of the losses is done on a wider basis. That is, a geographical area, which right now we have gone down to a village level. The assessment is done at village level for the yield losses a farmer suffers in his crop production. That is how this is done. But this is again a manual process, and it takes a lot of time. So technological interventions have now come in place, which are helping in a speedy settlement. Because what is the use if the farmer is not compensated on time, so that he has to reinvest in his next crop? That is all the more important. He cannot wait. He has to reinvest in the next crop production. So technological interventions are coming, and the major, as I said, the area and yield, it is only at the end of the season. Whereas the farmer suffers right from the beginning. Sometimes the monsoon does not arrive, and there is a risk of the farmers, he cannot sow the crop. So that's something we call as a prevented sowing. So this also has been incorporated in this new scheme, that if a farmer fails to sow the crop, he cannot wait. He has to wait for the entire 6 months period, the crop production. So in such a case also, we are providing there's no yield losses over here, but he is being compensated to a certain extent for his losses due to the prevented sowing. Let us the seed cause, the farmer, he does the field preparation. So he is compensated adequately to recover all the losses what he has incurred up to that sowing period. Similarly, sometimes we see that there is a mid-season or adverse flood happens in the mid-season, not at the end of the season. So again, the farmer is at loss. He may want to grow a short duration crop to compensate or to make his livelihood. So that kind of mid-season adversity is also covered now in the present system. And of course, we have introduced certain, so as I said, flood and cyclone or drought are the wider risk, but then there are certain risks like hailstorm, which is very localized kind of thing. So for those kind of things also, we do assessment at the farmer level. So now the technological interventions, like you have the remote sensing, which is now it's available in the open source. So that's what made our task very easy. And AIC takes pride in telling that in the entire state of West Bengal, we have implemented this remote sensing based crop insurance for the 4 seasons and very successfully. And the main advantage is that assessment is very objective, it is totally scientific, it is fair, transparent, and the farmer gets a loss in a very short period. There is no manual, because generally when you do the yield assessment by a manual system, it takes a pretty long time, because it's we have number of villages are very huge, and the manual process, let us say, it takes a minimum of 2 to 3 months for completion of the assessment of the yield, collating it, and assessing the losses and making the payment. Whereas remote sensing, it is very we can settle the claims within 30 days kind of thing. So this is one, and of course going forward, drone is another advancement which we are looking for individual loss assessments or any kind of loss assessment which have to be done in a very quick manner instead of a manual intervention where human resources have to be used. So that takes time. First of all, you should have the resources, it takes time. So for all these things, these kind of technological interventions are very useful. And of course, added to that, the technology of your machine learning, artificial intelligence, all these things helps for a faster settlement of claims to the farmers in times of distress.
Thank you, Madam Singh, for sharing the experience on that crop insurance market subsector. This is excellent. I have the one last question, but since it's given the tight time, I just want to give you just 1 minute. So hope that you can answer very simple way. Innovation and enhanced consumer awareness need to play very important role in promoting green financing and also for sustainable funding option. It can be done through regulatory framework, amending that, or the changing policy in the monetary and financial operation. I want you guys to give the one example initiative you are doing to promote this. Maybe I ask the Deputy Governor Azala, just only one initiative, only 1 minute. Sorry about that.
No worries, Samsup. So during COVID, we saw the rise of digital payments. So if I have to give one example, and we have commenced our national payment system reform prior to COVID, and we hope to see this coming on stream towards the end of this year. And this includes, this reform also includes dematerializing our government securities, which coincidentally is part of our obligation for listing our green bond on the London Stock Exchange. So the digital space and the key considerations of infrastructure design is resilience and security. So that's my 1 minute.
Thank you, Mr. Azala, for 1 minute, one initiative. That's highly innovative. Now I'll go to the central bank, Mr. Siddiqui. So the 1 minute.
Thank you very much. Actually, time is very short. So I started like that Bangladesh is actually encouraging central bank to think outside the box and become the developmental regulator for the financial inclusion and the green financing. Yeah. And in our sustainable finance taxonomy includes not only the green taxonomy, it also includes the sustainable finance, CSR policies, economic and governance, especially the good governance, green finance based on climate change mitigation and adaptation with the environmentally sustainable implications and impact on the inclusive, sustainable green growth. So this is our main objectives. And actually I missed to tell that in our capital market, we also use some green bond, especially green bond to improve the health of the country's poor people. And another green bond that is a shukuk in the form of, that is for the renewable energy ventures there. And I missed to say one thing is that very recently we introduced one digital microfinance in 2022. That is, nobody need to be an account holder of a bank or somewhere. If he has a one mobile phone, he can get loans. That is a very small micro loans, and people are benefiting from this. That is the very refinance scheme introduced from the central bank. So finally, I just end with the word that the financial institutions can certainly support the bankable, sustainable finance, provided that the regulators and the government create the needed space for them. Thank you.
I think you need perhaps several hours to explain, maybe several days about your initiatives. For example, you mentioned about this digital payment, that's excellent. And you are trying to expand also QR code payment services. So many innovation coming out. In Bangladesh, also here, also same thing, also from Fiji, also from the deputy governor. Now I go to the Madam Singh, the 1 minute, one initiative. Thank you.
1 minute, one initiative. From the government's perspective, what I see is the government has started this Jan Dhan accounts of the of the population, of the rural population specifically, and we have around 46 crores of Jan Dhan accounts. So which has really helped in the financial inclusion program. And I would be more than happy to tell that 80% of these account holders are the women. During the COVID time also, all the benefits were being, easily transferred directly to the farmers. So not only farmers, the beneficiary accounts because of these Jan Dhan accounts. That is one part of it. And as far as crop insurance arena is concerned, I think we have seen, we have a portal, national level portal, which has been introduced by the Ministry of Agriculture and Farmers Welfare to collect the data of all the farmers, the insurance data at individual farmer level, which is a very big initiative and which helps the entire process of underwriting as well as claims in the shortest possible time. That's it.
That's a great and a fantastic initiative. I'm so impressed about your one. Now it's a Q&A, like they open the floor. Now the audience now actively participated. Now we see the many questions in chat box. Hope that your panelists take a look at this chat box. There are some questions directly addressed the few panelists, but I have here now 10 minutes for this Q&A session. I take some liberty to pick up the question and designate to the specific panelists. But if some panelists you want to respond, please do so. But first one, I think that's addressed to Mr. Siddiq. The question is that the BB, Bangladesh Bank, doing fantastic work in the green financing. Can you elaborate more on this green transformation fund, how women are targeted, and how investment are assessed to avoid risk of the greenwashing? That's the first one, addressed the Mr. Siddiq. Now for Madam.
Thank you very much.
I will go on first, so that I'll give the time. For Madam, we have also questions to you about this crop insurance. Basically asking the digitalization, what really bother digitalizing the crop insurance? What are the current barrier to digitize the crop insurance, and how this barrier can be addressed? I think that you already have a lot of experience. Perhaps you're already doing that. Perhaps you can elaborate maybe 2 to 3 minutes. Now another question. This is a big question and then difficult question. So this one I like to ask the deputy governor to answer. Sorry, giving you this. We had a 2-day the session. Now there are so many policy advice and experience we shared together. The question from John here, that too, what are the key steps that policymaker and regulators should focus on? The second question is that what is the best role you think ADB should play and can play? But I hope that, because first one is a bit difficult, there are also two perhaps broad. I wonder you can more focus on your the the recommendation view on the ADB, what ADB should do to do that, then that would be really appreciated. Now I'd like to first ask the Mr. Siddiqui. After that, Madam, and then the Deputy Governor, Mr. Esala. Over to you, Mr. Siddiqui.
Thank you very much. The first question I received at the Green Transformation Fund. I already mentioned that the Green Transformation Fund is using in several sectors is the RNG and also the leather and something. This fund is using the industry directly for developing their own infrastructures and the improvement of their health, sanitations, and some other issues there. So the question is not directly benefited. The women is not targeted directly, but indirectly they are benefiting because their work environment is improving by these type of transformations, helping the very good industrial environment. And so with this process, actually, their mental health is developing and their social health. This is actually the indirect effect happening to the women sector. Yeah. And another questions I found that the policies that we mentioned that the sustainable finance, this is the mandatory for the bank and NBFIs to provide per year is 20% of their, this is the cumulative figure, the sustainable finance. And out of the sustainable, the finance, the 5% should be in the green finance. So we have a big list, the 68 products there, which are the sustainable finance and which products are the green finance. So we actually recognize that whether they actually did with the product is sustainable finance and also the green finance. Thank you very much.
Great for very succinct response. Now I go to the Madam. Over to you.
Yeah. So it's a kind of reiteration only, whatever I have been telling. Like the basic thing is it has to be supported by the government. The crop insurance has to be supported by the government because it has to be a trade-off between the farmer paying capacity. In any country for that matter, even the developed countries, the crop insurance programs have been highly subsidized because, as you know, it is a systemic risk. The agriculture risk is very systemic and it is not commercially viable for any insurance company to do it on a commercial lines and versus the farmers paying capacity. So it has to be highly subsidized program in any country. So that is a key feature of insurance. The second thing is, we have to address the losses of the farmers in any form to the best possible manner, and we have to compensate the farmer in a very timely manner. This is very, very important, and here only the technology comes into play that, we can use the technology for a speedy settlement of the claims and very objective, fair and transparent settlement of the claims. This is very important. And of course, the financial, that is the bank, the banking thing also has played a role that the benefit gets transferred to the farmer in a shortest period. So like if you are having a lot of channels, it becomes difficult, but if it is directly to the farmer, not through the banking channel where they are availing loans and all, it is directly to the farmer. So the compensation is very, at the right time, at the time of distress, he gets compensated. That is the main objective of the crop insurance.
Madam, I have one additional question.
Yes.
In the context of India. What's the extent of the digitalization in the crop insurance side market? Is it so much barrier, so very difficult to do that? Or how about the global level?
Yeah, sorry. A lot of digitalization in the sense, as I have told you, that a national level crop insurance portal has been, is being maintained by the Ministry of Agriculture and Farmers Welfare. So the data of all the farmers are punched into the portal at a centralized place. So this makes it very, very easy to identify the beneficiaries. That is one. And another digitalization, similar way we are doing this for the loss assessment. There are, applications developed when it is a manual assessment of the losses, the people who are doing the assessment on the field, instead of the manual process of collating the data, it is directly onto the system on the same portal where what we call as a crop cutting experiments are done to assess the yield losses. This data is also flowing into the portal. So that makes it otherwise it's a manual intervention. So this kind of digital thing is happening, which makes it very fast. And of course, as I told you, there are other things of parametric insurance also introduced for crop insurance, where you have the weather data and remote sensing. All these data also we try to collect through the digital platform so that it becomes speedy. It is speed. As you said, the area is very wide. So to speed up the process, these things are helping a lot.
Great. Thank you very much for more additional response. Now, like to go to Deputy Governor Esala on the big issue, but what do you see role of the ADB in this area?
Thank you, Sanju. I think from a small island state in the Pacific, we talked about what we are encouraged, or what I've been over the past few days really encouraged with, is hearing some of the innovative thinking and solutions. And I use this term blended finance. How in one of the sessions yesterday, was it yesterday or day one, we heard that financing, there's available financing, to fund this transition to net zero. So how do we mobilize that? I think there's a role that ADB can play in development, in blended finance and this innovation. We are talking about debt for climate swaps, catastrophe bonds. So speaking from a small island state, whose emissions is negligible on as the contribution towards climate change, we are encouraged by all these developments that will fund this transition or will mobilize this transition. But for us in the ADB, for ADB and in the Pacific, and for countries in the Pacific, basically we look to ADB to continue with scale on where they are currently assisting us in terms of building resilience in our infrastructure. So some of the transition costs that we are working with, building our infrastructure in such a way that will withstand some of the adverse climatic events. And this is something that ADB is helping us with: food security, making sure that we have resilience in our infrastructure, because I think some of the to be able to build them to withstand the adverse climatic events that we have been experiencing probably takes 4 times more than normal, and attached to this. So ADB is helping us with this. But I think the role that ADB will need to play is some of the issues that have been discussed around blended finance and how it can lend its convening power on linking some of these, encouraging some of the collaboration and cooperation efforts that have, that have come up from previous sessions.
Thank you, the Deputy Governor. That's a really important recommendation and suggestion to us. Very important. Build infrastructure more resilient. Right. And then food security mentioned also. All this very important. Now I just wanted to wrap up because we have only 2 minutes to go. Very difficult to wrap up this discussion and summarize that, but just maybe 1 to 2 minutes I spend time to summarize. Well, it's not easy, so please bear with me. I would say the pandemic and climate change, the gravity of these two challenges, really big wake-up call to us, developing country, and ADB, and global world. And also this one really affected not only economy, but also livelihood of people. We have to really work on this sustainable and green recovery That's a key for that. We need also include vulnerable people in our green future. So, and then help the poor and vulnerable people so that they can deal better manage to the adapted to the climate change risks. Now this pandemic, the pandemic and climate change, this provide us the opportunity, rethink, redesign, reset the financial system and the financial services you are working on. And today we have very rich discussions about what should we do, and your also valuable experience and also a recommendation given to us. We have also excellent innovative initiative you shared with us in the case of Bangladesh, many, but green transformation fund you mentioned, and also the mobile banking, the Fiji and also Bangladesh. I think crop insurance is a beautiful and highly innovative area that will enable that farmer and also the rural community to really think about the adapted new technology and innovation. And also, as you said, that very much targeted women and vulnerable people in rural communities. This is really, I think that this is beautiful, the instrument, very, very important instrument to think about. So recommendation given now from the Deputy Governor is that you think ADB, what you're doing is still very relevant. What you're saying, we continue to do that and scale up and focus more. You need it, support for knowledge, support for capacity building, support for also the hands-on support. For example, the one example will be infrastructure area. We have to make it the infrastructure more resilient, build that way. We have to work together with you to do that. And the financial sector, we have to also do that same way, make it more resilient, financial, innovative, and inclusive, and sustainable financing. With that, I'd like to thank you, all the audience who are participating today. This is about 7 minutes a long panel. I'd like to also thank you, these all distinguished panelists, the Deputy Governor, Esal Mashitabwa, and also the Additional Director, Mohamed Siddiqui from BB, Bangladesh Bank, and also General Manager, concurrently Chief Marketing Officer, the Madam Rajeshwari Singh. I'm sorry about Rajeshwari Singh. I worked in India for a long time, but just had some difficulty. But Madam, thank you very much. Also, I'd like to thank also the Just, also all the staff who support this. Thank you very much.
And I would like to thank Sung Soo Bra for his excellent moderation. Thank you so much. I hope you enjoyed this session as much as I did. And I also, from our side, from the organizer side, we are very happy that everybody who joined us gave us good feedback. So we wanted just to say that we hope that you want to share what you have learned, maybe with our hashtag Asia Finance Forum 2022. All the materials are available on the event platform, and I'm sure the ADB will also make sure that some knowledge management products will come out of that. I thanks again to our dear panelists to stay a little bit longer, and we are looking forward to seeing you at the 5th Asia Finance Forum. When it will be and where it will be and in which format, we don't know yet, but for sure there will be another edition. Thank you very much for joining the Asia Finance Forum. Maybe not only this session, we had 6 sessions, we had 2 keynote speeches, we had a welcome remarks by the Managing Director General, and I hope you found a lot of new insights, new knowledge, and you are joining us for the next edition. That's it for today. Stay safe, stay healthy, and see you all again.